Hello and welcome to the Inventure interview series. I'm Ted George, founder and chief narrative officer of Kleos Advisory, and today I'm going to explore the latest innovation in fund management, middle office as a service. For many managers setting up their first funds, putting in place a middle office is an afterthought. But if they're going to effectively identify and mitigate the risks, meet their regulatory and reporting requirements, and most importantly, keep the investors happy and on side, then having a middle office is critical to their success. In the past, setting up a middle office was expensive and time-consuming, but a new generation of service providers is emerging to fill that gap. And I'm delighted to be joined here in London by James Benoit, co-founder and executive chairman of Inventure Limited and founding CEO of Afrasia Bank, to discuss the innovative services that Inventure is developing. James, great to have you here.
Thanks, Ted. It's a pleasure.
So James, you've spent the better part of 3 decades helping financial institutions, from banks to fund managers to family offices, build operational infrastructure in Africa and Asia, the Middle East. But with Inventure, you're applying that experience to a very specific problem. Can you, in a nutshell, give us a picture of what you're building and why?
Absolutely. Inventure Limited is a corporate service provider servicing funds, family offices, companies, people, anybody who's investing in the region, wanting to use Mauritius as a structuring jurisdiction for many reasons, which we'll talk about towards the end. What we notice is that the industry is very dominated by very, very large firms, although they can tend to be very fragmented because they've been merged and many, many systems. Or there's many boutiques who are very good for a period of time, but they can't scale. So we noticed a gap in terms of putting technology to use to be able to scale up and bring costs down to especially provide fund managers and especially first-time fund managers in Africa. The average fund in Africa is $50 to $100 million. That gets very costly, right? That's not enough scale to provide all the other services, which we'll talk about separately. So we saw a gap there, and taking advantage of our banking backgrounds, banking many of those firms in the past, and we noticed that they weren't necessarily institutional grade infrastructure. So we're bringing that banking experience to put through to whole systems in an industry which has probably been a bit more lighter touch.
Okay, why don't we start with your core service offering, the fractional middle office, as you call it. What exactly is this, and what is the gap that you're trying to fill?
The gap is that it's very expensive to put all the infrastructure in for a fund. Now, big funds tend to have it, and then they'd outsource the administration to a service provider like an Inventure in the old days. But that middle office is expensive, and unless you're a very big fund, having a chief investment officer, chief operating officer, chief financial officer, all those compliance teams, all that administration is expensive. Big firms, big funds can afford it. First-time managers, startups, that's very expensive, and they may underestimate what's required to do that. So we saw that gap to say, we can provide more than just doing the accounting, the administration. We can provide all those fill-in services on a fractional basis because we can spread those costs around a great number of clients. And, which we'll discuss later, the use of technology is dramatically lowering the cost of delivering that.
Why is it that many funds, especially emerging ones, don't have a middle office? Is it a cost issue? Is it an awareness issue? Or is it operational?
It's structural because the first-time fund manager will be coming out of probably a big fund or a big establishment. They may not be aware of they take it for granted all those services they've had around them. They may get started and they may make decisions, but then they realize it quickly gets very expensive. And also, if they go and do get a bunch of quality providers, they may get a variety of service providers. How do you integrate them? And then all of a sudden, that can compound in great difficulty down the road because you've got a mishmash of providers that are not talking to each other, compliance, legal, product teams, they're working in their silos.
So what does the journey look like for someone launching their first fund? And in your experience, where do they usually go wrong?
Yeah, well, they're very excited and they're really getting getting their LPs and their investor base lined up, and that's going at full speed. And then all of a sudden they realize they've got to have all these other services in place. And so that then starts to create operational delays because they're not set up necessarily to do that. They're investment managers. And it's a level of detail and continuous process which you have to invest in that. So if they don't, then they get what they'll get structural fragility. It'll look good for a while, it can last for a while, but when something really goes wrong or they most need to be able to scale up, and they can't. So that's where we come in, a combination of the middle office with the right amount of technology and expertise to make sure that they can always deliver all the operational analytics, reporting analytics, the compliance analytics, all the data that LPs increasingly need.
Let's also talk about a key part of your solution, which is what you call the interim COO service. How does this work in practice?
Right. Well, we're working on that right now on two fronts with first-time fund manager. And basically, the fund was trying to set up its operations in Mauritius. They were going to try and hire a full-time person. They couldn't find someone. They couldn't find the right skills or at the right price. And it came to my attention, and I looked at it and said, well, we could do that on an interim basis. And that created the whole genesis of the middle office as a service. So we've now got a person, a very skilled chief operating officer from a lot of funds in South Africa, who is leading that, supported by our team in Mauritius. And basically the risk policies, the liquidity policies, the credit risk policies, uh, regulatory compliance, we're warehousing all that under our interim fractional chief operating officer role. We hope we'll get the fund administration business as well, but it's not a guarantee. So the businesses run quite in parallel. And so that's one case on the go right now, and it's being very highly appreciated. It's a trade fund going into Nigeria, and again, it's, as I mentioned earlier, that manager has got a lot of institutional experience in big banks or fund managers, has never set one up before. So we're providing that setup from the beginning, product design, regulatory approval. What should the fund look like? Is it a permanent capital? Is it a variable capital? Is it a traditional LPGP model? All those things come into design where experienced chief operating officers and teams can help that fund manager make sure he's got the right package to take to his LPs. And that's what we're seeing in the market. People are greatly relieved to have that burden lifted. And in fact, just yesterday, we were speaking with a very experienced fund manager out of South Africa. He's got 3 funds. Uh, at that level, they probably have a very sophisticated in-house CFO. Unfortunately, the CFO is leaving and they're scrambling, and so it was brought to our attention. So it's not just an interim chief operating officer, because a lot of the work on fund administration is the accounting piece. So we can provide an interim CFO role as well. So there's quite a breadth and compliance. So there's quite a lot of that in-house services which big funds would have. But even if they have a gap or a vacancy or they're at capacity constraints, we can come in and fill a gap on an interim basis.
I'd also like to talk about risk. This is a key focus for all fund managers. In fact, for anyone who's working in the financial sector. How do you identify risk? How do you manage and mitigate its impacts? With your services, what are the key risks that you can mitigate? And what risks do managers typically underestimate?
Well, I think it is that operational risk these days, and the security, data control, data quality, how it all gets managed, where it's stored, with all the investor, the GDPR and all that. I think there's just too much cases of emails going around, and we'll talk about that in the technology piece. So we can solve the operational risk. And then there's regulatory risk, making sure that all your products and designs and your policies are compliant with the latest regulations. So we're always scanning those and keeping up to date on that. And then I guess the other risk is if you're having troubles on the operational side or the regulatory side, that translates into very serious reputational risk. And you don't really get a chance to fix that with your LPs or your other investors once that goes wrong. So all the good ideas about the returns and the investment thesis, they get lost when they say, well, you aren't able to sort out what we call the operational, and maybe some people assume it's easy, but it's not easy anymore with all the regulations. So once those things start to go offside, you lose confidence of your investors, and then that's very, very painful to get back. So that's what we solve for.
Let's also talk about technology. In fund management, far too many processes are manual, particularly for first-time managers setting up their funds. So how are you deploying digital technology and automation, and how does this change the day-to-day work of a fund manager?
Right, good question, and that's exactly what we set out to solve. I said we were tech-enabled, and we mean that. So we're sitting here today in the London offices of Allview Systems, which is one of the world's leading providers of accounting, fund administration and accounting systems, especially for private markets, private equity, private credit, and all the range around that, which again tends to be much of the investment that goes into Africa. As well, the African investment tends to be dominated, the LPs tend to be DFIs, and they're very demanding on having data and ESG and quality of information. So Allview, our tech provider, allows us to solve that. We also have our own Inventure portal, which is a wraparound against all of that. So all the data is collated in one place. We don't send emails with heavy PDFs. Even KYC and onboarding documents are uploaded to the portal. We send reminders saying we need this document. So we make all that compliance, regulatory follow-up process seamless, fast, and we prompt. We don't wait. We prompt. Say we know your passport's expiring in a month. Not waiting till it's expired, or we send it to a bank and they say we need something more current. Our systems are designed to put all those little warning signs in place, which you could do to some extent if you're doing it manually. But as the complexity of regulations and rules, you really can't do that very easily off your spreadsheets with little reminders. So it gets all done through using AI and automating as much things as we can. But we also have to put human judgment in there as well, against, especially in regulated businesses. There's always a touch point where someone at a managerial or executive level is ensuring the quality of the data and the automation that it's produced is accurate and joins up with other pieces of information.
Yes, you mention AI there now, and everyone worth their salt is using AI. It is incredibly powerful. In fact, it's growing exponentially, but we all know that it has an Achilles heel, which is hallucinated data. In fact, you could say that, in fact, that's all that AI does is hallucination. How can you get the balance right between getting the efficiency of AI, but keeping human governance in there?
True, and in a regulated business, and especially in Mauritius, we're regulated as an administrator. In other markets like Luxembourg, you are as well. So you can take all the technology and the AI, but there has to be context around it. It produces reports. Even compared to 6 months ago, I've noticed the quality and the much lower level of estimation or hallucination, if you want to call it, is much better. But it still requires people to put a human context and a judgment around that. Say, does this add up and make sense, and does it link up with some other the data that we're seeing? And that's so important in a regulatory point of view, where sometimes things are a gray area. Can we deal with these people? Is it sanctioned? Is it not? What is the true risk of that? And that sometimes is something only, and again, in a regulatory environment, an executive has to make that decision, or a human has to make the decision. I think it'll be dangerous if people just let the AI run. So we put human touch points in at all the right aspects to take those right decisions.
Another critical issue for fund managers to master is ESG reporting, which has become extremely time consuming and confusing. The frameworks keep multiplying, LP demands escalate, and it seems the regulatory goalposts are shifting the whole time. How do you address this moving target effectively?
It is a very demanding one, and that's some of the funds I've worked with in the past. Not having the right ESG person or protocols is a real pain point, and their LPs will be very insistent upon that. Especially what we see for funds or investors going to Africa, a lot of that investor base is still out of Europe, and so people may say ESG looks like it's softening, but big institutions, they don't move that fast. And even in the States, it's still very much commercially driven, even if the administration is maybe not quite as keen on it. But it's embedded in big institutions, and it's going to take time to change. And it probably won't change as much as people think. So we can help solve that problem by real-time reporting, keeping up with regulations, embedding it into the compliance process when regulations change. And this is where having the right technology and able to understand what's changing, map that against existing processes and policies, and then take that burden off of the investment manager. So we embed that whole process into the compliance and risk management framework. It's not just an add-on; it has to be part of the process. And I think too often, even at its peak, it was still treated as an add-on. But what we're trying to do is say, let's embed it into all of our processes, and that makes it much easier for the fund manager to manage the metrics, do the reporting, and keep all the stakeholders on side in regards to the ESG requirements.
It's significant that you chose to set up Inventure in Mauritius, regulated by the country's Financial Services Commission. What advantages does Mauritius bring to your clients, particularly if they're targeting Africa and Asia?
Well, Mauritius has been a financial center for 30, 40 years historically off the back of the trade treaty with India. And then I noticed that when I went back to Mauritius in 2007 and I set up a Fraser Bank, we could start to see the whole Africa piece happening. And so Mauritius was very experienced as a fund administration business for India and Asia flows. And it's now turned into be an absolute gateway. So much the flows that are going into Africa are now domiciled structure. Mauritius, we've got 40 plus 44 tax treaties with various African countries and India. We've got English common law and French civil law, rule of law. For big funds, it's very comforting to know that their final court of appeal will be the Privy Council here in London. So that allows them to run very, very significant amounts of money and know they've got rule of law. They've got a tried and tested jurisdiction, which has been doing this for 30 years. We've probably got the highest, I think we have the highest per capita amount of accountants of any place in the world. So we have a pedigree in fund administration and accounting, which is scalable because we are an island state of 1.5 million people. So it's not what people sometimes think is, oh, offshore, 50,000 people. This is a substantial economy, manufacturing, tourism, and financial services. Call it a London, if you wish, for Africa. So that's the key advantages that Mauritius has: tried and tested, rule of law, and very plugged into African markets.
Let's also talk about the other key player in funds, which is the investors. Having an effective middle office isn't just about making life easier for managers, it's about keeping the investors happy and on side. So how does your model meet both of these needs?
For the managers, or the GPs as they're commonly called in the private equity space, for us to be able to automate so much of their administration and operations and integrate them together, that's a huge upside for them. And so the right administrator is important. There's all kinds of cases of relationships that don't work. The administrator can't scale up, or it's too fragmented. So by being best in class using technology and expertise, we take a lot of the burden off those GPs, and they can spend their time working with their LPs. But increasingly, LPs are not nearly as passive as they might have been assumed to be. They're very active in insisting on operational due diligence, ESG, how the returns are being generated. Is it just luck? What did you add to the value of that private portfolio? Show us why you made a difference as a manager. We can do that with data. So the LPs, and they'll sometimes want that information in a much more robust and direct way. They'll want to be able to plug into our investor portal directly, so they get information whenever they need it, rather than say, send an email to the administrator, it's Friday afternoon, we'll come back on Monday. And we operate 24/7, not everyone does. But if people really need something in the middle of the night for a report, they can go onto our portal, and with the AI, they can get board minutes or a pack from second quarter of 2025 without having to rely upon a human intervention. So LPs increasingly, or whoever the investor is, likes that ability to get data real time, and they like that the GPs have a very streamlined system. So at least if they're going through the GP can get it right away rather than take days, because they know that their fund administrator and the middle office is able to give them seamless integrated data. So it serves both.
Okay, we have time for one final question. What is the one thing any fund manager who's been watching this should do tomorrow?
They hopefully will sit back and reflect upon the operations, the administration, the accounting, all that aspect. If they were subject to an LP operational due diligence review tomorrow, would that give them pause? So they should do an operational audit, feel that they're ready. If they don't feel they're ready and they have that pause is probably the signal that they're sitting on a potential real challenge to their investment thesis, or at least the support of their investors. So we would encourage them all to, I think especially for newer and mid-sized fund managers, this middle office service is really mopping up what historically would be called the back office, adding it in value in real time and giving them much more tools and support than they ever had. So they should really be thinking about this middle office as a way for them to not have to duplicate all that at a heavy cost internally, and get best-in-class service still without having to put so much investment into technology, premises, people. They can get it from us on a fractional basis. But they should just be clear that even if they're with an existing manager, that it's the right manager at the right time for them. Because once those operational due diligence processes come in and expose a gap, then you're on the back foot. So I would say be prepared, think about these things in a much more proactive way. It's not a back office function anymore. It's middle office is value added, and it's very heavily driven by tech with good judgment around it.
James, thanks for a really insightful chat. As always, you make the operational case with real conviction.
Thank you, Ted. And I know you're off to Lagos very soon. And again, we're working very heavily with many investors going into Lagos. So that linkage is nice, and I think you'll be speaking to some of the people we're speaking to as well there. And safe journeys and good trip to Lagos.